According to a risk quantum research, top U.S. lenders spent $117.7 billion in 2021 amid a flurry of stock buybacks and dividend increases. 8 major systemic banks operating in the nation collectively raised expenditure from their common equity Tier 1 capital reserves by 111% from the previous year. Almost 13% of their average quarterly common equity Tier 1 reserves were spent on buybacks and common dividends, whereas they only spend 6.8% through 2020. The banks increased share repurchases by a staggering 251% to $82 billion, while overall dividend payments climbed only modestly, by 11%, to $36 billion. Bank of America led the group in stock buybacks in 2021, spending $25.1 billion, up from $7 billion in 2020, on its own stock. Following suit, J.P. Morgan and Wells Fargo each purchased $17 billion and $13 billion worth of shares. Morgan Stanley raised buybacks the most, by repurchasing $11.5 billion worth of stock, or 751% more than it did in 2020. In terms of dividends, J.P. Morgan took the lead, paying out $11.5 billion, up from $11 billion in 2020. Morgan Stanley recorded a 65% increase year-over-year, while Citi reported the highest gain of the group at 77%. In comparison to 10% in 2020, BNY Mellon allocated an average of 28% of its common equity Tier 1 capital for payouts each quarter. Comparatively speaking, Citi and Goldman demonstrated restraint, spending both about 8% of quarterly capital, up from about 5% the year before.